This is a presentation on Sandfire Resources, and in this presentation I'm going to talk you through the company as a whole, the growth trajectory of the company, and the valuations on the share price, point out some of the risk involved in investing in the company, and also to conclude everything to give you my proposition as to whether you should buy the company or not, the share price actually. So these are the contents that I'm going to cover. And the executive summary here is a simplified description of what I'm going to talk about in the following slides. So the current situation. So Sandfire is a copper mining company. It also have minor production in gold and silver, which all of the production of copper, gold, and silver primarily comes from the Grusa mine located in Western Australia. In 2019, it has acquired more resources in Botswana to gain control over the Motheo copper mine. And just last week, actually, the company has announced an acquisition deal of Matsa mine in Spain. And the implication there is huge because the total acquisition cost is expected to be $2.5 billion. And to give you a little bit more perspective, the market capitalization of the company is only $1.14 billion. So in the past 5 years, the company has a profit margin in between 15% up to all the way 20% at that period. And we can see that the sales, that the export of copper, of commodity from that company primarily comes from China, Philippines, and Japan, which accounts for more than close to 75% of its total sale of commodity. So to give you a little bit more perspective on the profitability of the Grusa mine, I've got to talk you through the production of the copper in that mine. So in the past 5 years, the company has averaged out the production of copper at 65 to 70,000 tons at that period. And in 2020, it has total reserves of 2.5 million tons of copper. The company has given us guidance on the life expiration date for that mine in 2023. This means that any sale of copper or any sale of commodity from that mine will primarily come from its total reserves of 2.5 million tons of copper. That's why the acquisition deal for the Motheo copper mine in Botswana is timely and strategic, because in 2023, the company will run out of production of copper. It will need to compensate the production in another mine, which is the Motheo copper mine. This is a slide to show you where the company stands in the copper industry in Australia. So currently, the company has 7.1% market share in that industry, trailing four of the largest producer of copper in Australia, like BHP, Newcrest, Glencore, and Oz Mineral. This is a visual perception for you to see where all of the activities or the operations that the company has conducted in. We can see that the Grusa mine is located in Western Australia, which is the domestic part of the operation. And for the international activity for the company includes the Botswana Motheo copper mine, Spain's Matsa mine, and also some of the exploration and evaluation activities taken in the United States, but nothing major for in that country. Since we've talked about the history and the the things that the company does, I've got to talk you through the growth trajectory of the company. So of course, because the Grusa mine is going to expire in 2023, the Motheo copper mine will be the production of copper for that company. The Sandfire has given us guidance on the company's first export date, or the first operation date in 2023, and it is forecasted to produce an average of 30,000 tons of copper per year. And in the next 10 years, from 2023 onwards, it is forecasted to generate about 3.5 billion revenue, with EBITDA of 1.14 billion. And this mine, the total revenue generated from that mine, from the forecast, is going to give the company, or is going to elevate the company market share in the Australian copper industry from 7.1% in 2021 all the way up to 11% in 2025. And this is strategic and important for the company to continue its growth trajectory, because to stay competitive, you have to increase the market share, which in this case the company is doing very well in terms of the total revenue generated from the company, relative to the total revenue generated by the copper industry in Australia. This is the timeline that I've talked about. In 2023 onwards, it will start its first production of copper in the Motheo copper mine. But in between 2021 and 23, the company will conduct some of the administrative tasks and also the installation of machineries, plants, and the properties of assets in that mine, for it to start producing commodities in 2023. Shifting away from the firm-specific events, or the firm-specific driven growth of the company, we will now talk about the systematic trends, or the macro factors that is going to influence the companies to continue its growth trajectory. We know that in the past few years, a lot of countries have committed themselves to net zero emissions, or trying to decarbonize the economy. This means that there are increasing adoption or increasing demand of renewable energies installation throughout the whole countries, throughout the whole world, because of the net zero emissions trend, or the commitment to that initiative. Also, we can see that the Tesla, or the electric vehicle, there's a growing demand of vehicle electrification because of the commitment to the net zero emissions again. And that initiative is going to drive the demand for copper, because of the component, or the commodities role, copper's role in driving the initiative, or the installation of renewable energies, or the use of renewable energies by the copper. And we can see from the column on the right side, the total green copper demand, which is copper used for renewable energies, is going to rise from 5.6% up to all the way to 15.7% in 2030. This is in percentage form relative to the total copper demand globally in the next 10 years. And we know that the China is our largest client, or the largest export countries that the company sell its copper to. the installation and the adoption of renewable energies like wind, solar, thermal, and hydropower is going to be number one out of all the other countries, which means that the demand for copper is going to rise in that country, driving driving more export of coppers from Sandfire to China in the next 10 years. And this is a good sign for the company because of the macro trends or the macro factors that is perfectly aligned to Sandfire's business model. We've talked about the growth trajectory, the mature copper mine production of 30,000 tons of copper in the averaged out in the next 10 years, and also how Sandfire fits into the wider or the broader initiative of net zero emissions. I'm going to talk you through the valuations analysis on this whole case study. I've adopted 4 key metrics here: 52 weeks trading price, brokers target from multiple brokers, 8, I think more than 10 actually, and then also my discounted cash flow valuation, and the trading or the comparable multiples to see where Sandfire stand relative to its peers in terms of the share price. We can see that my intrinsic value calculations price the company at $10.69, and the current share price at $6.22. It might seem a little bit overstretched because of its price history, which never trades beyond $7.48. But I stand true to my story because of the global trends and also the growth stories that it has produced or it has promised us on the company's profitability. And my intrinsic value doesn't feel far-fetched from the broker's target most optimistic case at $10.20. So I stand true to that valuation. This is a little bit more detailed calculations on the comparable multiples and the discounted value and the discounted cash flow valuation, the base case valuation on the DCF actually. But I'm not going to go into detail on this analysis because it's not the major or the primary reasons why we talk about why we evaluate on the company, because we just want to know about its growth trajectory on the company. So we've talked about the valuations, the growth story of the company, mature copper mine, pricing it at $10.69. There are some risks involved in investing in the company, not in terms of price volatility or the unexpected things happening to the share price, but some firm specific risk that you are taking as a shareholder if you invest in the company. And there are 2 key macroeconomic risks that the company holds, that where investors are exposed to when investing in the company. The number one, of course, is the foreign exchange risk that shareholders are taking. There are 2 key components about the foreign exchange risk here. The number one is that because the sale of commodity like copper, gold, and silver are all priced in US dollars, and that means any depreciation in the US dollars will cause the company to lose a small portion of its revenue. And also, the other side of the story is that if the US dollars appreciate, it might generate a higher portion of its revenue based solely on the appreciation of that currency. And the second risk factor about the foreign exchange risk here is that because it holds 500 plus of 500 plus millions of cash by the company in 2021, and that means and also 58 millions of that cash is denominated in the US dollars. Any appreciation in the US dollars will cause the company to lose some of its cash value if it transact back to the Australian dollar. Now, based on my forecast, we can see on the bottom right corner, the graph there shows that when the Reserve Bank of Australia and also the Federal Reserve keep their level of the decision of their interest rate at the same level, although not the same rate, but at the same level, the exchange rate does not move a lot. It experiences very little volatility. But when the GFC hits, we can see a huge divergence of interest rate decisions by both central bank, which causes the foreign exchange of USD relative to AUD to move slightly more than the past. This year, however, we know that the central bank of both central banks have kept their interest rate decision at a record low level, and also that the Reserve Bank of Australia have maintained their interest rate position up to 2024 with the cash rate holding at 0.1%, and the Fed has also maintained the same position, or the dovish position, of its interest rate up to all the way in 2023. This means that I do not expect any huge volatility in the foreign exchange of USD relative to AUD in the next 2 to 3 years. But moving forward in that year, like 2024, 25, 26, I cannot guarantee. But this is one of the risks that shareholders are taking. The second risk factor that the company and also the shareholders will be taking on is the world copper price volatility. A depreciation and appreciation in the copper price will cause the company to lose or gain some of the revenue generated by the company in the future. The company has given us guidance on the copper price volatility impact on the profit before tax. A 10% increase or 10% appreciation in the copper price will cause the company to generate more than $60 million of profit before tax. On the flip side, a 10% depreciation in copper price will cause the company to lose more than 16 million profit before tax. As of right now, the copper price is stated to be $12,900, which is which in the past 10 years it has never reached that level before. So to give you some perspective, what I believe is that the copper price will mean revert back to its 10 years average at $8,000 to $10,000. And this depreciation back to the mean reversion of the copper price is all priced in into the discounted cash flow valuation at $10.69 as my base case. So we've talked about the risk and also how my valuation has accounted for the risk factor in the copper price. We will now move on to the final stage where we packaged everything to give you my recommendation as to whether the company is a good buy or not. Based on the base case scenario at $10.69, I believe that the company's share price still have room for improvement from the current share price at $6.22. I will give you my three of the reasons. Number one, we've talked about the firm specific factors that is going to drive the company's growth. The Motheo copper mine that is going to generate $3.5 billion revenue in the next 10 years when it start its operation in 2023. The second case here is that because of the recent announcement of the Matsa mine, although the deal has not been completed, that analysis and also the estimation of the production from the Matsa mine is going to push the Sandfire's production up to the level that is competitive or comparable to its peers in the Australian copper industry. This means that it will help increase the share price, the share price of the company also in the future. And the third case is that because the company fits perfectly with the macro trends or the growing initiative of net zero emissions and also the decarbonizing economy, the demand for green copper is not going to slow down, and it's going to benefit even more for Sandfire to export more of its copper in the future. Therefore, I believe that you should just go right ahead and buy the company right now at $6.22. There might be some deviations from the share price because this is recorded on the 22nd of September. So the current share price might be different, or might increase a little bit or decrease a little bit, but the proposition still stays the same. Where I'm convinced that the company still have room for improvement in the share price. And that's all for today's presentations. I hope you enjoy it. Please do look up on my blog post where the discussion might deviate a little bit, but the central story of the company still stays the same. And once again, thank you very much for this session, and take care.